Okay. So let's
All
go ahead
right, so
through it.
yeah, okay, so we're looking at Wednesday, right? So Wednesday's about to close. We know when we have a strong close like this at the end of the day, if this becomes the previous day high once market closes, we know if we close within this area, like the top quarter of the day, like an 85% chance we run the high.
Yeah.
So what we'd be looking for is once the market opens, we get into Asia session or London session, pop this high, and maybe come here into the 1.2, 1.3 this area here. And then once that's run, we'll be looking for a return down to this 4 hour pivot. Because I guess we will technically also have one here.
Yeah.
So it'd be one of the two. So I would say if we're going to move up even further, like to this area, right, we would see the pop into here tomorrow and then
Right.
up there,
At least the high
right?
of it.
Right. Or, like we were saying before, we see it pop down into this 4 hour fair value gap down here.
Hmm.
And then you get one of those ridiculous Fridays where it just grinds up.
Yeah.
And then we see that level hit. Because this will be the external liquidity. So if it punches this first, like let's say this is previous day high, let's say it punches it, doesn't come onto this levels. If it starts coming down to here, then we'll be waiting to see what happens in this area to see if we get here. But if it's just like super bearish and it's just punching through Thursday and Friday, then we'll be looking for this Tuesday low
Yeah.
for it to grab the liquidity down here and maybe touch here. I don't think that's super likely. I'm like, my thought is that we just kind of pop in here. Honestly, my thought is that we'll just pop in here and just chill here Thursday and Friday.
Yeah.
Maybe on Friday we'll like run this high or something like that. But that's my prediction. Let's see how it
Yeah.
plays out.
I think that, and we could look at like the IPTA side of it too and see like how far it pulls back and whatnot.
Yeah, yeah, exactly. So I think that's the other thing. That's like when you just start making these predictions and then keeping track of what happens. You know what I mean?
Yeah.
Because it would be very possible for me to say if I because with the computer I can mark out these external liquidity levels.
Hmm.
So I can say once the external liquidity level has been ran, right? Whatever we're using, if we're using the silver bullet, it'll only look for shorts down to whatever the nearest inefficiency is, whether it's
Yeah.
this one or this one. So
Hmm.
like we pop this and now the system's only looking for shorts.
Right.
Then once we get in here, right, then
Hmm.
we can wait for the day to close because then we'll have new external liquidity levels, and then we're aiming for whatever the closest external liquidity level is. And once
Yeah.
that's run, then we're aiming for the inefficiencies again.
I think that's a good start. And then kind of just like the with the auto trader, once we get it to that point, then you just let it ride and just look at the data, you know?
Yeah, that's the thing. Like the auto trader is kind of dumb right now. It's just taking the first fair value gap that appears
Yeah, dude, I think, you
during that
know,
time frame.
I
But
think
if we can add some logic, like some context to it,
yeah, I think we might have to move to a different platform to do it, but all those percentages, we could look for our rule of thumb, um, and like have
yeah,
that
the problem is
pre-programmed
like
into price, but that's
I try,
crunching a lot.
I know, I try to think of that today, and I was like, well, and I started looking back. I went down to the 5 minute. I was thinking, well, okay, if it passes uh, a certain level, because the system took this long over here,
Hmm.
right? So it took a long there with a stop there. And you can see it's annoying because really it was a bullshit stop.
Yeah.
Like we got stopped off for some bullshit. So I don't think there's going to be a situation where we can say above the 1.2, above the 1.4, look for shorts.
Right. I'm saying if we could use
Because,
it to see the percentage number instead of the grading, all it's seeing is numbers. And we can set it between X percent and X percent. And it might be like 1.222345 is the actual 50%. You see what I'm saying?
uh-uh,
Like the computer would have to tell you what level is each percent because ultimately the fib puts a grading on each level. And kind of like we
right,
just did on the weeklies, it doesn't have to be 1.2 or 1.3. You could do 1.25. You could do 1.255. You know what I mean?
right.
And so we'd have to build in a way where the computer just sees you could type in whatever 40% and then it knows, okay, well, 40% is whatever rounded best to 1.267,
Uh,
you know?
yeah. I don't know if that's going to be, I don't know how possible that'll be,
Yeah.
just because of the way that it calculates percentages,
Mm-hmm.
because it calculates the percentages once the level's been ran.
Yeah.
So if we were to type in 40%, we would have to make a literal calculation for, it would have to know like all the levels in between to find which one is closest to 40%. So right now I have five, and that's about 1,000 lines of code.
Yeah.
So if we wanted to have it to that level of accuracy,
Right. We'd have to be on a different platform for sure.
maybe see if we said something closer to like where it was like close to, so we could say 70%, and it would look for the variance of like 5 to 10%,
Yeah.
and it would show the level that's closest to that. But it
Exactly.
wouldn't be the level at 70%. It would be like, oh, the 1.2 is at 66%. This is the closest calculated level. You know what I mean?
I mean,
It
that
would
would
have to be
be,
the levels would still have to be pre-calculated.
yeah.
But what we could do is only display the ones that are within a percentage range.
Yeah, that would be
Does that
perfect.
make sense?
Yeah, of course.
Yeah. So I
That,
could say if 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 the percentage is less than 60, or if you type in you want to see levels around 60%, then it would show anything from 55 to 65.
yeah.
And then it would just display those. Or you could say show me levels above 60%.
Right. I
Would
see what
probably
you're
be and
saying.
then it'll show you any level that's
Mm.
calculated that's above 60%.
Yeah, yeah, yeah.
Yeah.
Okay. Not too bad. But yeah, I think
Uh,
that at least we got a couple models to start working with too. Um, just some little things, I guess. So that one, when it ran that weekly high, it didn't really retrace at all.
no. So like I think we ran the weekly high. Let me just
Monday.
mark it out. So we were right. Yeah, because we took the previous week high here.
Yeah.
This was technically the previous week high,
So,
right?
oh my
We
gosh. So we
popped
don't
it.
have to come back to the inefficiency till we ran the current weekly high. That's why it didn't come back.
Yeah, right. Because we ran it. We came down, we filled out all the efficiencies prior to news,
Yeah.
and then there wasn't any need for it to mess around. It just launched. But we do still get some reaction here.
Put a line for that Monday high.
Out there.
So
We
it ran
consolidated a
it.
little bit there.
Yeah.
Yeah. So it took the Monday high, set around here, and then launched up to the weekly 1.2, which was a 74% chance of
Mm.
getting hit.
Yeah, and they were super bullish.
Yeah. So, and we know our 4 hour fair value gaps here somewhere. So tomorrow, up the high, and then no, let's see what happens. Yeah, these 4 hour fair value gaps are, I mean, they're lethal. High, come down, down, burst.
Yeah, that's clean.
Yeah,
I'm excited to see what happens. We'll see what happens tomorrow. We have it recorded and mapped out, so we'll be able to come look at it.
right. Yeah, and just start taking notes of what we see because I think with the 4 hour fair value gaps and external liquidity levels, maybe start putting some IFTA in there.
Hell yeah. I think we could get something going.
Yeah,
Good deal, bro. Glad we hopped on the call.
yeah, dude. All right, man. Oh, it's 10:30 over here already. That's crazy.
Damn. It's 2:40. I'm about to have to get ready for this event I'm going to. But
Nice, nice.
hell yeah, bro. Talk with you
All right,
soon.
bro. Yeah, I'll catch up with you tomorrow. We can see how our predictions worked out.
Right. All right, man. See you tomorrow morning.
All right, bro. Later.
Peace.